Out of the thousands of stock opportunities presenting themselves right now, just based on our current market environment, I am hyper-focused on just 4. So today, I wanted to key you in on these 4 all-in dividend stocks for me, tell you why I'm so bullish on them, and then more importantly, break down my concentration strategy for you to ultimately allow you to see why I have so much confidence to take the exact investment approach that I'm taking in order to avoid any real long-term losses. Now, what you absolutely have to know, especially if you're new to investing, is that despite all the negative news headlines out there, the clickbait titles, and even the thumbnails that you're going to see saying that this is the end, the stock market is finished, this is really just one big opportunity for every investor who's able to remain calm, invest into high quality companies, and more importantly, just be patient. After all, as I always say, it pays to be patient. Now, big picture, the market's really reacting out of total fear of uncertainty of a few factors, from the implications of Trump's tariffs and a looming trade war to inflation creeping up and interest rates remaining exactly as they are. But what you have to factor in is that we can go back 2 years, 5 years, 10 years, heck, even 30 to 50 years, and surprise, surprise, we're going to discover that history simply repeats itself. This is to say that we've been here before, and we will ultimately see ourselves through to the next market cycle, likely better off than where we are today, if we take advantage of high quality companies while they're on sale. And if it gives you any sort of relief, my portfolio personally is down by roughly $25,000 right now, and I'm here with a smile, feeling optimistic and more bullish than ever. Bullish, that is, on really just 4 stocks that I want to share with you. So if you want to move in the same style that I am, you absolutely can with some peace of mind. Let's get to them with Visa, ticker symbol V up first, which is a transaction facilitator. Now, the main reason I'm a huge Visa bull is because Visa boasts more than 4.7 billion cards as a part of their global payment network that processes billions of transactions every year. And more than that, Visa doesn't issue the credit. They offer products that are a part of the Visa payment network and make all their revenue from the actual transaction being completed using those very products. So when I see Visa falter to $332 per share from over $360 per share not too long ago, and the company's fundamentals remain very well intact, I'm just saying it's a no-brainer here to look into the company. And understanding this about the long term, we'll click to the 5-year chart to see it. We're going to see that Visa delivers through with almost 90% worth of appreciation during that time period. More than that, if we scroll down, we're going to find revenue just continues to pour in, and the company is just doing very well in terms of net income, up over 14% as of recent. Now, as for that balance sheet, which is important to look into, we have assets topping $94 billion to their measly $55 billion in liabilities, adding to the health of the company. But with our focus on dividends, we can go ahead and click into Simply Safe Dividends to find Visa boasts a 99 safety score with its lower yield coming in at 0.71%. But this is a dividend growth pick. So scrolling down, we're going to see that we have a 21% payout ratio after 16 years worth of a dividend streak and a mighty 17.7% average dividend growth rate. However, if you are looking for a bit more of a dividend yield, but like me, still hungry with an emphasis for the growth, then you'll want to check into UnitedHealth, ticker symbol UNH. As I've shared here on the channel before, UnitedHealth is America's largest health insurer, but it also has Optum Health under its belt. That adds another revenue stream and therefore makes for a larger moat around this company. To me, it's just a no-brainer to have this one on your list. And think what you want about America's current healthcare system, but recognize we can't really shrug off the ability for this company to make money from that very system. And as UnitedHealth really has just been in and out of the news spotlight for quite some time for all the wrong reasons, this stock has just been incredibly attractive to me. As a 20 to 30-year-old investor, well, I'm going to be in this one for the long run. Therefore, I like it now as it trades for $481 per share, which is down from $548 earlier this year and way down still from those earlier peaks last year after the murder of Brian Thompson. Now, if we click into the 5-year chart, we're going to find that UnitedHealth has been performing very well, up over 76% worth of appreciation, and more importantly here, maintaining its financials. So let's go ahead and scroll down together to find that revenue remains up and in the green while the company keeps its balance sheet well intact with over $298 billion in assets to just $195 billion in liabilities. Now, in regards to the UnitedHealth dividend, we have another safety score coming in at 99, a bit higher of a dividend yield coming in at 1.75%. We're also going to see that UnitedHealth maintains a very low payout ratio of just 30%, which is healthy, and continues with their dividend streak of 32 years. But this is why I really love UnitedHealth. As a shareholder, I'm enjoying the dividend growth here with the average growth rate coming in at 37%. And now with the less volatile financial and healthcare industry industry kingpins out of the way, I'm going to go ahead and veer in a different direction with you and talk tech. Now, many of you may purely be interested in only doubling down on the higher yielding dividend stocks that are out there, but I'm just going to come right out and say it, hit you square in the face with this. If you can invest into the Walmarts pretty calmly and with a lower dividend yield, you would severely be limiting yourself by not actually looking into some of these tech powerhouses. So let's first break down Apple, ticker symbol AAPL, which I know it doesn't need an introduction, but I will say this. Despite Apple's recent declines in sales, this is a company that will very likely continue to be at the forefront of tech innovation. And while many may actually make the case against Apple that it hasn't really been delivering through on new products, I say this is all a part of the genius of the whole deal. As a consumer really enjoys familiarity, Apple is simply innovating the software while keeping the hardware looking the exact same. More than that, Apple AI is what I suspect will be mind-blowing, so I remain an Apple bull. And right now, Apple's share price has tanked to just $216 per share from nearly $250 per share weeks back, presenting a steal of a deal, especially if the stock continues to plummet. I have already been loading up on Apple this past week, and I look forward to actually buying more shares should the share price keep coming down. Now, the 5-year chart blows my mind for a company that everyone, again, claims to be hitting the rock bottom of all rock bottoms without any new products. We're seeing over 212% worth of appreciation. Income statement wise, we can see that revenue continues to trickle in. Balance sheet also remains very healthy at $364 billion in assets to $308 billion in liabilities. Now let's click into Simply Safe Dividends to see a 99 safety score, a dividend yield coming in at 0.46%. But again, this is all about the growth, at least for me. Total return we're talking. Now, Apple has a payout ratio of 14% with just 12 years worth of a dividend streak, a solid dividend growth rate of 8%. But investors, if there was one stock, like just one stock that I just cannot get enough of and only have been loading up on every single week the last few weeks, it's been Alphabet, ticker symbol GOOGL, which has just been unstoppable and likely will remain unstoppable, with the only real negative news as of recently being that Trump's administration is still pressing for a bit of a breakup when it comes to Alphabet. But I'm doubtful that this will cause any real long-term harm or troubles for an advertising powerhouse that recently just entered the quantum computing space. Now, Google and YouTube also serving as the top 2 search engines in the entire world just gives this gem, I think, the greatest moat in the world. Therefore, the recent nosedive from over $206 per share to just $167 per share and falling has had me out of my shoes and buying more shares. We really don't get these opportunities all the time, so take full advantage. Now, clicking to the 5-year chart, we're going to find over 175% worth of appreciation, and scrolling down, an impressive 11% increase in revenue, while net income shot up recently by over 28%. Now, find me a company with a clean balance sheet, because I certainly cannot find one, but here we are with Google coming in with over $450 billion in assets to just $125 billion in liabilities. And while it may lack the dividend yield metrics for you, right now you got to give this one just the credit it deserves. Clicking into Simply Safe Dividends, while it may lack the dividend yield metrics that you're looking for, just give it time and it will likely become very similar plays to, say, the Apples or Microsofts of the world. Nonetheless, we're going to find that an 80 safety score comes in hot with a 0.48% dividend yield, and that payout ratio is down at 10%, meaning plenty of room for growth. Now, if you're sitting there saying, I just don't know, I mean, investing at a time like right now is a little much for me, I want you to take a moment and just breathe. Then go ahead and look at the big picture over the span of time. Get yourself to at least come around to dollar cost averaging into the S&P 500, or if you're feeling up for it, taking on a bit more risk with a technology fund, my personal go-to is the Vanguard Technology Fund, ticker symbol VGT. But no matter what, I'm going to tell you this. I'm buying more of these funds every single week to ensure that I never actually lose over the span of time should my individual dividend stocks totally fail me. With that, I would certainly love to know what you've been buying these days or your overall thoughts on the market. So comment below to let me know. Tune in right here if you haven't already hit $100,000 in your brokerage account. I can attest by some of the tips I'm going to give you in this video, it's going to get you there much faster. Subscribe and I will catch you all in the next one.